Hello and welcome to the latest Insider interview. Our guest today is Luke Finch of HgCapital, the private equity group which manages HgCapital Trust. Luke, thanks very much for coming in.
Morning, thanks for having me.
So please tell me about the trust. What is it and what is listed private equity?
Sure. Well, the trust is HG's largest investor. It's a listed investment company. It's a member of the FTSE 250. It's about nearly 2 billion of market cap, and it's been going for over 25 years. HG Trust invests in funds managed by HG, and what we do is buy B2B software companies, data businesses and tech-enabled services companies, and we buy those privately as a private equity firm, and HGT gets to participate in all of those investments.
And HG is a big European private equity firm. What is its relationship with HGT, the listed trust?
Yeah, well, HG is probably the biggest private equity firm in Europe that no one's ever heard of. We manage close to $55 billion for nearly 300 institutional investors globally. We are the manager of HGT, so the independent board of HgCapital Trust appoints HG as their manager on a rolling basis, and we manage their vehicles alongside the vehicles containing the other institutional investors.
And the trust is one of the best performing investment trusts ever. It's returned about 17% over the past 20 years. How have you achieved those returns?
Yeah, so I think the AIC came up with some analysis earlier this year saying it is the best performing investment company in the UK over the last 20 years, which is fantastic. We buy boring, mission critical software companies that businesses need to help them operate, to help them be more efficient. And we buy a lot of those businesses. We have over 55 in the portfolio right now. And we've bought hundreds of them over the years. So as the manager, as the investor, we hopefully get a little bit better every time we make an investment. We learn a bit more, we help those businesses grow faster, and HG Trust benefits from all of that knowledge.
And why are these boring business-to-business companies so effective?
Well, software ultimately helps businesses run more effectively and more efficiently. If you think about your own experiences, how many apps does Interactive Investor now load onto your phone to help you manage your expenses or reporting or compliance? These are jobs that used to be done by people with pen and paper or spreadsheets. And software just remembers things better than humans can. It keeps records better than humans can. And so wherever there's sort of compliance, enforcing record keeping, software is part of the solution to help businesses perform. And so that's the trend we're backing, really. We're backing the trend of making kind of expensive workers more effective and helping sort of automate the more mundane elements of their jobs.
And are these types of companies quite recession proof? Have you seen any changes in profits or revenue this year?
No, so some of our biggest businesses have been reporting their best ever months or quarters recently. If you think about tax software, your bookkeeping software, your payroll, your ERP, some of your compliance software, as long as you are in business as a customer, you need to pay your taxes, you need to pay your people, you need to comply with your regulations. And so it's a bit of a non-discretionary purchase. You sort of have to do it. And then actually when times are getting tougher, you need more efficiency. So if your employees are getting more expensive, you need to automate more to survive. One of our biggest businesses is a company called Visma. It operates up in Norway and the Nordics and the Netherlands increasingly. Norway is one of the most expensive countries in the world to operate. It's a very high labor cost environment, and Visma's tagline for many years was sort of automate or die. If you're not automating, if you're not helping your workforce become more efficient, then you're not going to win.
Can you speak about some of the other big positions in the portfolio? So Access is another top holding, isn't it?
Yeah, so Access is now one of the UK's largest software companies. It's a real success story. We first invested in it 3 or 4 years ago. It was about £1 billion of enterprise value. It's now 9 billion and growing fast, fastest it's ever grown. It's just put out kind of public earnings. It's not public, but we encourage some of our big businesses to report outwardly, and it's growing, profits at about 40% over the last 12 months. It does ERP software across a series of end verticals, and it's a fantastically managed business with great processes. It's converted a lot of its systems to SaaS, which provides more value to the customers. It relieves more pain points for the customers, and therefore, the customers value that product more and more.
Can we just break down some of those acronyms,
Sure.
please? So ERP, SaaS, what are these kind of business sectors, and why do you like them so much?
Well, SaaS is the delivery of software. So, if you rewind the clock 10, 20 years, most software was sold as a CD-ROM, and you downloaded that onto your laptop or put it onto your server in the building, and it was sold as a sort of upfront cost, and then maybe you bought an update from Microsoft or whoever every year. What SaaS has done is it's changed it. It's delivered over the internet, over the cloud, is continuously up to date, and it doesn't reside on kind of your servers or your laptop. It resides, on Microsoft's cloud. That allows Microsoft or whoever, Access in this case, to just do more. It's always got new modules that it can upload. Everyone's always running the latest software. You can see how your customers are using the software and improve it better. And you can sort of track where they're using it, what it's delivering, where they need more help. And it just allows you to be a better service provider and to give your customers more innovation.
Why should investors own private stocks? There are many brilliant companies in the public markets. Why is that potentially a bit of a gap in the typical DIY investor's portfolio?
Well, look, I say if you're sitting in the US, there are some very large, very brilliant software companies out there that you can go and buy. Microsoft, etc., Intuit. These are things that I own personally, but they're huge. They're hundreds of billions of market cap. If you're here looking for kind of UK or European exposure to software, there's really not that much, and that's because most of it sits inside our portfolio or other private equity portfolios. So if you add up the value, the enterprise value of our 55 companies, it's over $100 billion of EV. So we are behind SAP, the largest kind of player in European software. So, behind that, there's some much smaller businesses like Sage, which is 6 or 7 at the moment, maybe more. And then other businesses are being taken private all the time or getting bought by bigger software companies. So there's actually not a lot of sort of listed software companies in Europe for investors to hold. I like to think of HG Trust as almost the free float of that kind of 100 billion euro dollar EV portfolio that we've assembled.
So you buy the private businesses. How do you realize the gains from your investments? Do they go public? Do you sell them to another private equity investor? And what is the typical return from when you buy a company for the first time and when you realize that gain?
Yeah, so over the years in our software deals, we've had close to 70 exits, and our gross returns on those have been over 3 times your money. What that translates down to at the trust level, as you said earlier, is a sort of 17% compounded growth over very long periods. The way the trust works is when we make an investment, we take cash off its balance sheet and put it in those companies, and when we sell an investment, the cash goes back hopefully 2 to 3 times or more, and that snowball for the trust keeps on rolling. So when I started working with the trust 13 years ago, it was about 200 million pounds of market cap. Now it's close to 2 billion, just from that ball rolling. When we're selling our companies, we're often selling them to other sponsors or to sort of larger software companies, sometimes in the US, who are consolidating markets or in particular want to come into the European market. For US firms entering Europe, buying businesses from us is one of the best ways for them to do that.
Have you been very busy this year? What have been the biggest purchases and exits?
Yes, I mean, we've been very busy this year. We've been sort of broadly in balance, in fact, in terms of sort of investment activity versus exit activity. So for all of our clients, including HG Trust, we've sort of bought and sold about $6 billion worth of businesses in each side. Some of our bigger acquisitions this year have been a business up in the Nordics, up in Sweden, called IFS, which again is a ERP, enterprise resource planning software business, focused on companies with lots of fixed assets, hard assets, and we think it's got the best, most modern product in the world for those customers. So we're delighted to be invested in that. And we also took private one of the UK's biggest software companies, a business called HgCapital, which was listed in London, and we took that private halfway through this year at just over £1 billion of enterprise value. I mean, interesting aside there, HgCapital, it's a business we've long followed and tracked. It's done very well for the public shareholders, but the management team there and the founders and the board felt that if they stayed public, they would become a consolidatee because someone bigger would come and buy them. In private hands, with our supportive capital, with a long-term mindset behind them, they could become a consolidator of their little segment. And that's why ultimately the board recommended selling to our funds.
Have you got a good pipeline of companies to invest in? What's your process for finding new investments?
Yep. So we have at HG, over 150 investment professionals and 60 plus operators and an overall team of about 350 people. Their sole job is to find great B2B, software data services businesses in very specific end markets. So we've got, nearly 20 people just looking at tax and accounting software, mainly in Europe. So no one else has that kind of scale as focused as we have. And that means we build wish lists of companies. So there's about nearly 14,000 companies in our sort of tracker. We're never going to own all of them. We're trying to choose maybe 8 to 10 of those a year to back. We follow those companies a long time. So typically we've known and interacted with and spoken to and tracked and discussed a specific company for 5 to 10 years before we invest. So that wish list of sort of really well qualified, our sort of absolute top of the wish list, there's typically 100 companies at any one time on that. And then we try and persuade them, often they're founder owned, so it's sort of explaining to the founder or the management team why becoming part of the HG portfolio is really valuable for them.
Luke, thank you very much for coming into the studio.
Pleasure.
And that's all we've got time for today. You can check out more insider interviews on our YouTube channel. Don't forget to like, comment, and subscribe. See you next time.